Merry Christmas everyone, welcome back to AZ Trading. Hope you're all doing well and staying safe during this end of year period. I know I've been away for a few weeks now. I've missed you all very much, but we're back now and I've got a pretty interesting trade to show you guys. And even though my main objective had not been reached, this trade will still show the importance of having a daily bias. So this won't be the longest video and we'll just cover these three main topics. But before I do, I'll just turn on my executions and the labels, where you can see where my entry took place, where I've taken a few partials along the way, with my stop loss reduced to break even, and I've got my final part of my position running to my final objective. And if you've watched any of my previous videos, you know the pattern we use to trade is the RMR pattern. I've just gone to a 1 minute chart, and if we're looking for an RMR pattern within here, we have some relative equal highs. When they were broken, we could call this the raid. And then after the raid, we look for a market structure shift. So when price breaks a swing low, this one down here. And finally, after that bearish shift, we look for a return area. So we've got a gap up here. If I extend that one to the right, you can see that when price retraces into this return area, that's where you can place a short. And if you had a short position over here, you could target some objectives below, which could include these relative equal lows down here, as well as these higher time frame equal lows, which you can see on the 4-hour chart. So this could be a good example of a bearish RMR setup. However, the objectives have not yet been reached. And if you guys were looking very closely at this area of price action, instead of finding that bearish RMR, you might actually be able to see a bullish RMR. So if I outline that one underneath these equal lows, as well as underneath these ones, when price breaks through, this could be a bearish raid. And after a bearish raid, we wait for a market structure shift bullish. And once again, a return area, which is a gap down here. When price retraces into that return area, you can start to look for a long. However, in this case, you can see that if you placed a long during that return area and you placed your stop loss at the bottom of the raid over here, you'll notice that this trade would have stopped you out without even reaching any short-term objectives. So you wouldn't even get a chance to take off any partials. So now that I've showed you two examples of the RMR pattern, one that's a bullish one and one that's a bearish one, it would make sense for you guys to be thinking, how can I discern between these two, or how can I filter out which one I should take? Whether I should be looking for a bullish trade or looking for a bearish trade. Because the RMR setup itself is quite clean in both of these examples. And the way you can filter out whether you're looking for a bullish or bearish trade is by having a daily bias that is completely based on logic and liquidity. And by having a bearish daily bias for that day, I was able to filter out any bullish trade ideas so I could focus primarily on bearish ideas. But before I talk about daily bias, I'm sure you noticed I didn't place a short entry over here. I actually placed one over here, which is actually on that raid leg. But you all know with the RMR pattern, you don't participate on the raid leg. You wait for the raid, wait for the market shift, and then you participate on the return. But what if I told you guys that this raid leg is actually a return leg in a higher time frame? So if I zoom out to a 30-minute chart in the higher time frame, if we look towards the left, we had a very strong bearish movement. But let's have a look on Wednesday, and on Wednesday we have some relative equal highs. And when price breaks through, we can call that the bullish raid. And after the raid, we have that bearish market structure shift, which is very, very decisive. And if I draw a fib from the top of the raid to the bottom of that market structure shift, we wait for a return area. And in this return area, we have a gap as well as that 50% level. So as price was traveling before the news at 8:30, we had a very sharp bearish manipulation leg, stopping out any traders that are going long and enticing new traders to start shorting down here. And then immediately after, those FOMO shorters would have been stopped out once again as price retraced into that gap as well as that 50% level. And as price reached that area, that's where I placed my short order. Just as an additional confluence, if we look at the S&P, at the same time of my entry on the NASDAQ, you can see that the S&P has retraced into that gap as well as a bearish breaker block. And on the Dow, at the time of the entry, price had retraced into that uppermost gap. So these were all additional confluences that helped me find this short position at this time. Okay, quick message on daily bias. Let's pretend the day had not even started. How would we form a daily bias? And forming a daily bias on Friday was actually very easy to make because of this swing low over here. And we know that this is not any ordinary swing low, because on a 4-hour chart or a daily chart, you can see that that swing low actually made multiple instances of equal lows, which made this area a very key area of liquidity. So going into Friday, we could expect some bullish manipulation before a bearish dump towards that objective. So having that bearish daily bias in mind, do you remember that bullish RMR pattern that I showed you at the start of the video? We had this raid, market structure shift, return into a gap over here, and a bullish trade idea. You can see how clean each of these elements are, but when you have that bearish daily bias in mind, you know that based on probability, your experiences and backtesting, that those higher time frame equal lows, that area of liquidity, is just more likely to be reached than anything above. And even if you saw this bullish RMR pattern, where would your objectives be? Would you be aiming for this equal high over here? And now you can imagine, is your objective this high over here? Does it have more liquidity, and is it more likely to be reached than this higher time frame equal low area? And I'm sure most of you will agree that this area is more key. Honestly, this would be a much better teaching example if price actually reached that objective. But don't take my word for it, test it out yourselves. Just find some area with a higher time frame equal low, and when price is quite close to that area, you'll notice that price will paint some bearish RMRs to target that area, and this will occur much more often than bullish RMRs to target short-term bullish objectives. And in hindsight, a potential reason why this trade did not reach that key area of liquidity may be because it was a Friday, and typically during Fridays the weekly range has been capped. Not all the time, but just generally. And perhaps price is saving this key area for a more volatile time. Alright, very quickly, with relative strength, why did I choose to short the NASDAQ and not the S&P or the Dow? If we go back to that 30-minute chart and draw the same fib that I did last time, you can see NASDAQ retraced to around 50%, S&P retraced to around 60%, and on the Dow, price has retraced to 70%. So very quickly, we can discern that the Dow is the strongest, retracing to 70%, S&P in the middle to 60, and NASDAQ is the weakest, retracing to 50. And that's it. That's how I use relative strength to pick which indice I should trade. Actually, this is a pretty good example to show relative strength. Do you remember that bearish RMR that I outlined at the very start of the video? We had a raid, shift, and return into here. So keep in mind that the NASDAQ was the weakest. If we placed a short on the NASDAQ with our stop loss at the raid's high over here, throughout the day, you can see NASDAQ is consolidating, nothing too interesting, but you wouldn't have been stopped out. However, on the S&P, if we place that same trade with that same idea, with our stop loss at the top of the raid, here on the S&P, your trade would have been stopped out. And same thing with the Dow. We know that the Dow was the strongest of the three. If we placed our short during this return area in the gap with our stop loss at the top of the raid, on the Dow, you would have also been stopped out. So just applying that very quick step of using relative strength, that can be the deciding factor on whether you get stopped out or not. Alright everybody, that'll be it for this video. We're gonna slowly ease back into making some videos, since during this time of year, I'm least active in the charts, but I'm still pretty active on Discord, so feel free to join our community. It could be a very powerful learning tool for your trading. But other than that guys, I hope you enjoyed this video, and if you did, leave a like and subscribe. It makes me very happy. And if you've got any questions, leave them down below. I'll get back to every single one of you. But until next time, have a very happy end of year and take care everyone. Peace.